welcome to today's webinar all about the Streamlining Foreign Offshore Procedure. This is a great program for anyone that has not been filing their U.S. taxes and has not been compliant, and you're probably freaking out. Well, this entire webinar will tell you why you should not freak out and why it's actually quite easy to get into compliance with the IRS. So let's jump right in. Who am I? Why am I in front of your computer screen right now? Well, I'm Natalie, and I am from California, living in Vienna, Austria. I am not a native-born Austrian. You probably could tell from my accent, among other things. I have a background in information technology and finance, and I moved abroad just like you and found out I had to file U.S. taxes from abroad. It was taxing, to say the least, and basically, I went through different firms. They charged me an arm and a leg, didn't know the difference between Austria and Australia, didn't know how to file my US taxes correctly, whatever. I'm sure you've all gone through it as well. And I decided enough was enough. There needs to be a tax software for US expats specifically. And that's how MyExpatTaxes came abroad. So MyExpatTaxes is the leading tax software for US expats, no matter where you live, if you're in the EU, if you're in the UK, because that's not in the EU anymore. If you're somewhere in Asia, Australia, South America, if you're in Canada, right? You're close, but you're still not in America. You still have to file your US taxes. Basically, wherever you live in the world, if you have to file US taxes, look no further than MyExpatTaxes. What are we talking about today? Well, before we even talk about getting caught up, you probably should learn the basics of US taxes. So who has to file, what do you have to file, when do you have to file? Obviously, there's a couple side topics you need to be aware of, because if you're not aware of them, it can hold really hefty penalties like the FBAR and FATCA. And once you've learned about all of the things you have to do that you probably have not been doing, how do you get compliant with the IRS in a way that doesn't cost too much money, doesn't give you any penalties, and will help you sleep better at night? Because I know you're probably rolling around going, the IRS is going to get me. So besides those honestly more boring bits, I'll also talk about things you can look forward to once you're done getting compliant, which is money, right? It all comes down to money. Once you get caught up with Streamlined Filing Compliance Procedure, you'll probably get lots of refunds from stimulus payments, child tax credits. Maybe you'll even have student loan forgiveness from filing your taxes. So we'll dive into those topics at the end, but I do have to bore you a little bit first with the details about, what US expat taxes are in the beginning. So when you file your US taxes, you obviously need to have your financial documents in order. This is probably one of the first leading problems for people because, to be honest, we don't always keep all the records, but this is a pretty handy guide of what you need if you're filing US taxes for the first time. So if you're employed, get your local annual payslip. It's going to make life a lot easier so you know what your gross salary is and how many foreign taxes you've paid to your local country. If you have a company pension, make sure you have documents about your company pension, and especially how much your pension is worth at the end of every single year, and if you obviously got any distributions from it. Now, if you're working in certain countries like the UK, Australia, New Zealand, Hong Kong that have different tax years, aka your tax year is somewhere super random in the middle of the year, like April to March, and not January to December, you will have a harder time filing US taxes because US expats do have to basically file according to the US tax year. That's January to December. So again, you should get probably monthly pay slips so that you can organize your information in the calendar year, because you cannot, unfortunately, use your March to April amounts for a January to December tax return. So keep that in mind. If you're self-employed, again, you need some type of record of how much money you've made, how much expenses you have, how many foreign taxes you paid. So pretty much the same. Obviously, you probably have a bigger tax return and you're not using pay slips, but more of a tax return that's completed with all that information on there. So you probably have to file your tax return locally first before you can do your US tax return. You also have to think about including this form. It's form 8858. You can Google it afterwards. You also get prompted for it when you use MyExpatTaxes, and then you don't have to Google it. But basically, that's something to note, that if you're self-employed and you're filing your taxes, especially if you're doing it yourself or you're using a US-based tax software, this form gets missed a lot. And it's a very important form to basically tell the IRS that you are self-employed abroad, and that meaning that you have to then disclose that information on this kind of corporate form, so to say. Now you have other income streams, same principle applies. You have to get the documents that show what's the gross amount you got and how many taxes you've paid on it. If they're US income, that's pretty easy. You probably have a 1099, so 1099 div, 1099 int, 1099B. If you don't know what I'm talking about, you probably don't have these income streams. If you know what I'm talking about, make sure you save those documents. Basically, if you have, some type of US brokerage or pension accounts, you will get some type of form mailed to you or emailed to you. So save those, because the IRS has a copy as well. And if you have non-US income streams, make sure you have some record of it, right? So if you have rental income, you have record of how much income and expenses you have, what's the cost basis of your property that you're renting. If you have investments abroad, again, what type of income you're getting from those investments, pension, etc. So moral of the story, if you want to file an accurate US tax return, you do have to have your financial documents in order. That is step number one. Now, who actually needs to file a US tax return? So that is anyone that is a US citizen or a US green card holder, the second being a little bit trickier. A lot of people, have gone to the US, they've worked in the US, they got a green card, and then they left the US and their green card expired or they gave it up. But the thing is you don't technically give up your responsibility to file US taxes unless you formally revoke your US green card using the form I-407, and then on top of that, you file a final tax return with a residency termination statement. Until you do those two things, even if your green card has just expired, you're still on the hook to file US taxes. You're still seen as a US tax resident. You still have to file just like any other US citizen. I am sorry if that is your situation. I know it's not great news, but it's important to understand that. So if you are a US citizen or a US green card holder, you probably have to file taxes. The next part is, obviously, if you don't make enough income, you don't have to file taxes, right? So there are filing thresholds. So in order to know if you have to file taxes, you have to look at your worldwide income, your worldwide gross income. And it's exactly as it sounds. All income from all sources, the gross amount, so before deductions and taxes. And if you combine all of that together, so say you have a German salary, you have a UK pension, you have investment income from the US, you have rental income from Spain, I don't know, you got money everywhere, right? You combine all of that, the gross amounts, and if that is over the filing threshold you see on the screen, for your filing status, you need to file a US tax return. So obviously the filing thresholds change every single year. We just have the most recent ones for this calendar year. So filing your 2022 taxes in calendar year 2023. Again, this is for your 2022 tax return. Keep in mind the amounts were slightly lower in the previous years. So obviously if you're filing back taxes, you have to look and reference what's the filing threshold per year. We have all that information on MyExpatTaxes, so you don't have to look too far. But let's walk through what these filing thresholds mean and the statuses. So I think it's pretty self-explanatory. You're single, you're not married to anyone, then you're using the single filing status. If you're married filing jointly, that's basically you're married to another US citizen and you file jointly with them on your US tax return, or you're married maybe to a non-US citizen that has elected to be treated as a US tax resident. So that's also an option you can do. The next filing status is the tricky one, married filing separately, but it's probably the most common filing status for all of those expats that we say moved for love, right? You fell in love with someone, they brought you to their local country, you decided, I'm not going back to the US, you got married to them. Then you ask them, hey, do you want to be included on my US tax return and disclose every single cent that you earn abroad, even though it's none of the US's business? And when they tell you no, you probably have to file separately. So you can't file as single, because you're married, but you don't want to include them on your US tax return. So you're opting for the married filing separately status. Obviously, if you have US children and you pay for more than half of the cost of managing your home, you can actually opt for the next filing threshold status, which is head of household. We'll talk about that shortly. But most will go under married filing separately if you're married to a non-US citizen. The filing threshold is, as stated, $5. It's been like that since 2018. No need to Google and check that through. It's $5. Keeping in mind, this is just a filing threshold. Your standard deduction, which is basically every single taxpayer that is filing Form 1040, they get a type of standard deduction. So any income under that amount is not taxable by the US. That is the same as single. It's just the filing threshold is a lot lower. I don't know why. It is what it is. I'm sorry that this is happening to you, is all I can say. Now, the next one, as I said, if you have a qualifying US child with a social security number, you pay for more than half of the cost of keeping up the home. You might be able to qualify for head of household. That's another status that can be applicable to those married to non-US citizens. Otherwise, there's qualifying widow, which essentially is, if unfortunately your spouse has passed away and you were married filing jointly with them, for a limited amount of time, you can use this filing status. What is also on the screen that is not such common news is if you're self-employed. So if you make any type of income via freelancing, it can be writing a blog, it can be selling furniture, I don't know, any type of self-employment income, freelancing income, whatever. If you have that and you report it on Schedule C as self-employment income, if you have over $400 in net profit, you have to file a tax return regardless of any of the other filing thresholds. And that's because any amount in self-employment net profit over $400 is subject to US self-employment tax. So that's basically Social Security taxes. I will say if you're reporting your income locally, like your self-employment income locally, and you're in a country that has a totalization treaty, I know that means probably nothing to you, but if you're in one of these countries, and there's about 26 of them, you won't be liable for self-employment tax. But say you're a digital nomad or you're someone that's self-employed in Mexico, you might be on the hook for self-employment tax. So that is something to really be careful about and not play around with. Now, if you don't meet any of these filing thresholds, if you're saying, oh, I'm off the hook, I don't make enough money to file a tax return, you might want to file a tax return. I will get to that towards the end, but let's just put it this way. Some people that did not need to file a tax return filed their tax return and they made good money. They made thousands in refunds and got paid interest on top from the IRS. So even if you don't need to file, you may want to file. You can determine that later as we continue through this presentation. And just to note, if you have children and you're worried that the minute they turn 18, they have to file a US tax return, that's not necessarily the case. Age is not a major factor in filing. If you have children, you do have to watch out if they have, unearned income. Obviously, the filing thresholds stick. So if they're 6 years old and they're making bank, kudos to you, first off, but they have to file a tax return. Doesn't matter. If they're 21, they do not make that much money. They might not have to file a tax return. So it really just depends on how much money they make. The only thing that is not super obvious is if they have unearned income. So if you have children and you are super proactive about, their financial security and you open investment accounts for them, things like that, and they have unearned income, so interest, dividends, capital gains, things like that, you may have to do something special, either declaring their unearned income on your tax return and or they have to file their own tax return. So do watch out for that. Obviously, if you have specific questions, you can always email our team at the very end, team@myexpataxes.com, and we're always here to help you. Or I'll give you some more resources in terms of Q&A later on. So if you're 65 or over, this is one thing that does make a bit of a change. Your filing thresholds will be slightly higher, except for those married filing separately, because that just does not budge. It's $5. It'll probably stay $5. Not sure why, but it is what it is. Alrighty, so like I promised, not only do you have to know about your US tax return, you get the added benefit of having to know about FATCA as well. Honestly, I think at this point, it's like seen as this, I don't know how to phrase it, kind of this hidden topic that no one wants to talk about. But you need to know that as a US citizen, if you open any financial account abroad, so bank account, pension account, investment account, you have to report this information to the US in one way or another. The first way is actually through the financial institution. So don't be shocked if you open up any financial investment accounts or bank accounts and you see a question that goes, are you a US citizen? And when you answer yes, they start asking you for your social security number and like a million questions, million things to sign, and that you consent to the IRS seeing all your information. It's just the law. Every financial institution has to comply with it if they basically want to work with the US. So that is situation number one. Also, don't be shocked if you ever get a phone call from your bank. Say you're living abroad for 30 years now, and out of nowhere, your French bank calls you and says, hey, you're a US citizen, come in to sign some papers. This is the reason why. So hopefully they don't close down your bank account. Most banks are getting better about this, but it is always a possibility just because of the strict requirements about being a US citizen with foreign financial accounts. Regardless, that's the first way that your information is reported back to the US. The second way is, similar to a US tax return. They may have the information, they want you to repeat it. So even though they technically get all that information from your financial institution, they do expect you to file certain forms if you reach the filing threshold for those forms. So the first form being the FBAR, which is short for Foreign Bank Accounts and Other Accounts Report, so to say. If you have over $10,000 in combined maximum balances, which we'll talk about what combined maximum balances mean, you will have to file the FBAR. The FBAR is not really tricky. It's very informational. It's kind of annoying, honestly, because you have to report, okay, what's the address of the financial institution? What's your account number? How much money you had in that account? So it's pretty intrusive. However, there's no tax calculated. So it's not that you're getting taxed on the amounts in your bank account. It's a purely informational form. The thing is this purely informational form has a penalty of about $10,000 if you don't file it. So make sure you file it. And on top of that, it does not go to the IRS as you would expect. It actually goes to the Financial Crimes Enforcement Network, FinCEN, that has their own separate portal. So make sure you file it properly. If that sounds confusing to you, just know that if you use MyExpatTaxes, we don't make this an additional hassle. You can report all your FBAR information directly as you file your US taxes. We'll determine if you need an FBAR or any other forms. We'll complete them for you automatically and we'll send them to the right place. Now, with that being said, there's one step up from the FBAR. So it's basically the FBAR on steroids, so to say. A lot more information, a lot more checkboxes, right? About when did you open an account, if you closed the account, et cetera, et cetera. If you have over $200,000 on the last day of the year, or at $300,000 at any time of the year, keep in mind, if you're married filing jointly, these amounts double. If you're in the US, these amounts decrease. So this is just the average expat threshold. You have to file Form 8938. This is kind of known as the FATCA form. This does go in your US tax return. This does go to the IRS. This does also hold a $10,000 penalty. So these forms are no joke. I know no one likes to talk about them, but if you don't talk about them, if you ignore them, there can be consequences. And I do want to say, even if you filed your tax returns and you haven't been filing your FBARs or things like that, there is a delinquent FBAR submission process. So don't worry too much. Like I said, if you haven't been compliant, it's not that you'll be hit with all these penalties up front. There are ways to go around it, and that's what this whole presentation is about. So just quickly, so you understand what it means for maximum balances is, as it sounds, it is how much was the maximum amount you ever had in that bank account or any other financial account from January 1st to December 31st of that calendar year. This is not easily available information from most banks because people don't really report that way. One tip I would give you is to look at your monthly statements and see which month had the biggest balance, or if you really want to be super accurate, you can always pool all your transactions and calculate a running balance. I think most people go for the monthly statements. It's a little bit easier. But basically what you do is you look at all your bank accounts, look at all your financial accounts. Ignore anything that's the US. Any US account, you don't need to report. This is only for foreign accounts. You calculate the maximum, so not the ending, not the average, but the maximum balance per account. You add up all those maximum balances together, keeping in mind you might be double counting, and that's intended. So even if you had $5K that you had in bank account number 1, and then you transferred that $5K to bank account number 2, you still have to count that. So if $5K was the maximum in bank account number 1 and $5K was the maximum in bank account number 2, and it was the same $5K, it doesn't matter. You add both $5Ks together to get $10K. So you may double count. That is intended. Anyways, so you put all the maximum values together, keeping in mind it's not just accounts that you solely own, it's also accounts that you have your name on. So let's go back to that situation where you're married to a non-US citizen and you have a joint bank account with them, your name's on it. You got to include that. Any financial account that has your name on it, your signature authority on it, must be reported. If your signature authority is on a company bank account, you better bet that goes right into your FBAR list as well. So if you add up all the maximum values together, you convert it to USD using the intended treasury exchange rate. Again, we will do that automatically for you. You just have to report it in the local currency on MyExpatTaxes. If it exceeds 10,000 US dollars, you have to file the FBAR, and you have to file the FBAR and report every single financial account you have interest in, even if that account itself does not exceed $10,000 and or there's even $0 in it. The minute you have to file an FBAR, you have to disclose everything. Keep in mind, the IRS also has this information, so you should try to really do your best to complete it, the FBAR, and make sure that it is, as accurate as it can be. Obviously, the IRS will not fault you for, not being to the penny. However, don't be wildly off with your estimates either. So another thing to note, as I've talked about, is the FBAR and the FATCA forms have penalties. They're not the only ones. So this is another reason why the streamlined filing compliance procedure is so important for expats, because sometimes you'll have these other forms included in your tax return you're not even aware that you needed, that also have very high penalties. So, this is not an extensive list. This is just the most common ones we see. One is if you have foreign trusts. So basically say that you set up some type of trust, or you have some type of complex pension type of account somewhere. So private pension that's set up like a trust, or even you get a gift. This is what gets a lot of people, is say a non-US citizen gave you $100,000 or more in one calendar year. You have to file Form 3520, possibly 3520A as well. And if you don't file these forms, $10,000 penalties per form per year. IRS definitely enforces this one. This is probably the most enforced kind of late filing penalty form there is. It is not a joke. I definitely don't like to see the notices from, when potential clients come in saying they don't know what to do with this notice. So like I said, something to be aware of. If you have foreign trusts, private pensions can sometimes be as foreign trusts, or you have some type of gift or inheritance from a non-US citizen that's over $100,000 in a year, you probably have to file this form. Now, the other forms to be aware of is if you have a foreign corporate. What is a foreign corporate? It is a limited liability company that's established anywhere outside the US. If it has limited liability for you and it's incorporated outside the US, that's a foreign corporate. If you own it really depends, but for the most part, if you own 10% or more, or if you own even just 1%, but say your spouse, who might be a non-US citizen, owns the other 99%, you might have to file this form. So again, if you have any interest in a foreign corporate, you might have to file any of the forms between 5471, 8865, 8858, all $10,000 penalties if you don't file the form. So again, another high penalty form that a lot of expats kind of don't realize they need until it might be too late, but it's never too late. There's a streamlined filing compliance procedure, so it's never too late. I know this is a scary slide. Let me just finish it, and I promise you it gets better. I already talked about the FBAR and the FATCA forms. Another form that doesn't have a penalty, but it can result most of the time in taxation, is 8621. That's if you own foreign pooled funds. So say you invest in mutual funds in Germany, you make interest, dividends, you sell them, you probably have to file Form 8621 for passive foreign investment companies. That's just their fancy term for saying foreign pooled funds. So to say, even if you don't make money from these funds, if you own over $25,000 worth of these funds, you still also have to file this form. A lot of times if you make income and you file this form, you probably will see some type of taxation, because the whole thing is the US does not like that you put your money somewhere else that they can't regulate, so they tax you as much as possible. You might have tax owed. And again, if you don't file taxes and you have tax owed, then you have interest and penalties on top of that. So just something to keep in mind. Again, not all expats have this. These are less common forms, except for the FBAR and FATCA. Those are pretty common, but the other forms are less common, but they do happen. We support all of these forms in MyExpatTaxes, and just be aware that if you do need to file these forms, especially for back years, we're going to try to get you through with the Streamlined Filing Compliance Procedure. So I have scared you probably with all the past information. I'm sorry for that. I really don't mean to scare you. I know taxes can be scary. It shouldn't be, right? It really shouldn't be. It's confusing for sure, but it shouldn't be scary. And the reason for that is, even if you haven't been filing, even if you have been filing and maybe now you realize you haven't included everything you needed, there's always a solution. There's always a solution to get out of it, right? So the IRS has acknowledged that they have not made this an easy process for US expats, so they actually have the Streamlining Foreign Offshore Procedure. So this is an amnesty program offered by the IRS to allow US expats to get caught up 100% with their tax liabilities and be compliant. Even if you haven't filed for 30 years, it doesn't matter. You can go through this program, making sure that you're eligible for it, right? So the eligibility criteria is first for at least one of the 3 back years you'll be filing for. So that's the sweet part about the streamlining procedure, is that you don't have to file all 30 back years, only 3 back years. So making sure that at least one of those 3 back years, you didn't live in the US, you were actually an expat, right? So you didn't have a US, they say abode, so to say, but basically means you didn't have a main home in the US, and you were considering that you were living abroad for at least one of those years, and that you were at least physically outside the US for 330 full days in one of these 3 years. So that has to be the calendar year, January to December. I will say, sometimes people don't pass these, right? I definitely have seen expats that come in that are expats, they live abroad, but because they have family in the US, they travel so often back to the US every year that they don't necessarily fulfill that second requirement of being physically outside for 330 full days. We have still filed the Streamlined Filing Compliance Procedure for them, and it has been accepted. So just because you don't perfectly fit in this box doesn't mean that you cannot do this and you don't have options. It's just something that we would take a little bit more care to make sure that we explain your situation to the IRS, because these are things that an IRS agent will actually review personally and look at what your explanation is. So even if you don't, again, fit into the box that they created for you, it might be that your situation is still covered. So another part of it, which is obviously non-willful. So if you haven't been filing willfully to avoid paying taxes, we can't really help you, right? But I mean, again, I would hope that as you go through this program, you're saying that you just made the mistake, you didn't know you had to file taxes, you didn't know you had to include all these different forms, you didn't mean to, omit any tax liability. Then you can obviously go through the Streamlined Filing Compliance Procedure. So you do have to certify that it was non-willful action and that, you were actually an expat. So what is streamlining, right? What is this amazing solution I keep alluding to? Well, it's basically you either file 3 back years of original or amended returns. Amended mean corrected. So again, like if you've been filing regularly and then something just hit you in one of the last slides I said, such as you having a foreign corporation and you need to file Form 5471, and now you don't want to get stuck with the $10,000 late fees per year, you can actually go through streamlining filing and then amend your prior year returns, include 5471, and they will omit those late filing fees. So, you know, this is a really nice solution. So, like I said, 3 back years of taxes. If we start now in this calendar year, it would be 2019 to 2021 as your back years and 2022 as your current year. 6 back years of FBAR reports. So it would be 2016 to 2021 as your back years, 2022 as your current year. Keep in mind, streamlining returns have to be paper mail. So that's what I meant when I said there's literally an IRS agent that will look at your explanation for why you're going through streamlining, look at your whole entire application. I have not seen a streamlining application ever rejected. I'll let you know if I ever do. Except, well, when I say that, one that we've prepared, right, through MyExpatTaxes. But you can go ahead and e-file your current year tax return. And for your FBARs, those all have to be e-filed. So you don't have to paper mail any of those, which is a nice part. So again, even if you haven't filed for more than 3 years, you only have to file back to 3 years. There's one exception to this rule, very rare exception, but I do have to disclose it. In the event that you have a foreign corporation that is more than 50% owned by US taxpayers, and you had retained earnings in that foreign corporation at the end of 2017, you will need to file back to 2017. So that is one exception. Otherwise, it's only 3 back years. So most expats don't owe back taxes. If you file, you actually probably get refunds because of, you know, the stimulus payments, child tax credits. I'll get into those. So basically, I've seen these people come in through our support channels. They say, I'm so scared, I haven't filed taxes. Can you help me? We say, yeah, of course. We're the only tax software that allows you to streamline through our platform. They go through, they spend a day completing everything, maybe even less, depending on if they have all their information readily available. They complete the streamlining procedure and they look at their tax returns, which they get right after they pay a draft version of their tax returns, and they cannot believe it. Because say maybe they have US children and they're eligible for the additional child tax credit, they didn't get their stimulus payments yet. They're seeing, you know, over these 4 years of tax returns, over $10,000 of refunds. And on top of that, when they actually file, when they get their refunds, the IRS will normally pay interest on top to you, even if you filed late. So if you file late to the IRS and you owe them taxes, you owe them interest. The IRS will pay you interest if they didn't pay you on time, even if it was your fault for not filing. Pretty cool. Anyways, so I say that as if you're nervous, please don't be nervous. Yes, in some situations you may owe taxes. Most expats won't owe taxes. Most expats will get a refund instead. So obviously, filers beware. I just say this because it's very common. If you use a US-based tax software to file your taxes, if you use a tax firm, even if they're so-called expat focus, they still use US tax software. Most expats cannot e-file using US-based tax softwares, either because they're married filing separately and their non-US citizen spouse doesn't have an ITIN, or they don't have a US phone number, or they don't have a US address, or they can't even pay because they don't have a US credit card. Just be mindful of that. It's very frustrating to get to the end, pay, and realize you have to paper mail. MyExpatTaxes is the only tax software that allows pretty much 99% of all expats to e-file. Only in very rare cases can you not e-file. Again, keeping in mind, streamlined returns can never be e-filed, but at least we can e-file your current year. And we do offer the streamlined package for a very affordable rate. Obviously, you know, we do have to charge some amount of money because it's a lot of years of taxes. You always get a professional review when you do the streamlining package with us. Essentially, you will have a tax professional look at your entire profile, make sure your tax returns look good, everything ties out, you're getting the maximum refunds, and we'll sign off on your tax return in the event there's any IRS questions afterwards. So that's the benefits of streamlining with us. If you go with the average market price, it is pretty pricey. It's probably going to be more $2,000 plus. So we do try to make it as affordable as possible and as easy as possible. But of course, you're filing 4 years at once, so do expect some work ahead of you. So when you file your taxes, you'll get, like I said, your tax return back, and you will probably be very confused because it's a very large tax package, most of the time over 50 pages. To make things easier, these are the forms you should focus on. Form 1040 will be your overview form. There's a couple schedules attached, but it's just, really supplemental information. Your Form 1040 will tell you how much income you made, what deductions you're taking, any other credits you're taking, and what's the final amount you owe and or get as a refund. And then if you're getting, the additional child tax credit, you will see 8812 in there. This is for you to get the refund for having U.S. children with U.S. Social Security numbers that's under the age limit. You will also maybe see either Form 2555 or 1116, or both. You can use both, and these are two big expat tax benefits that ensure that expats are not owing taxes. I'll get into them more in depth in the next slide. You may see 8833. This is to claim a tax treaty benefit, which I'll also get to in the next slide. And of course, you'll see the FBAR if you need it, and Form 8938 if applicable for you in your tax return. So those are the very important forms. Not listed on this, but also important for streamliners, is you will see this other form at the very top. It's 14653, and that is the streamlining certification form. So that is the form saying these are the years that you're streamlining for. This is the reason you're streamlining. So that is basically the application form, like your cover sheet, so to say. You only use it when you're streamlining. If you're filing normally, you don't need this form. So what are the different expat tax benefits? Why do you not end up owing taxes? So the first one is the foreign earned income exclusion, which is claimed on Form 2555. You can exclude over 100K of foreign earned income, that meaning that you have to be physically abroad when you earn that income, and it must be earned. So it must be salary or self-employment or some other type of compensation you actively work for. So for example, say you work for a German company, it's salary income, but they send you to the US for 2 weeks on a business trip. Just keep in mind, those 2 weeks you were in the US on the business trip is not considered foreign earned income because it's US source, because you're in the US working for it. Likewise, you work for an American company, but you're stationed or you're based in Germany for the entire year. You don't go to the US at all, but you get paid via an American company on a W-2 into a US bank account in USD. It doesn't matter, that is still considered foreign earned income because you were physically abroad when you earned that money. So you basically can exclude a lot of money from that. On the form, the amounts change every single year, but it's always over 100K. And it's pretty straightforward if you've lived abroad for over a year. If you haven't lived abroad for over a year, it's a little bit more difficult because you can't use the bona fide presence test. You have to kind of use this other test saying that you were physically abroad for 330 full days within a consecutive 12-month period. Like I said, if you're abroad for a full year, easy. If you're not abroad for a full year, a little bit harder because you'll have to get out your Excel and figure out what's your 12-month qualifying period. Or use MyExpatTaxes, just tell us when you moved abroad, tell us any trips you had to the US, and we figure it out for you. Regardless, while it's a pretty easy form to use and it's great for countries that are low income tax countries, it does prevent you from having some cool benefits in the US. So it does prevent you from getting the refundable child tax credit. If you have this form in your tax return, you can kiss goodbye to those refunds. You literally just cannot claim them if you use this form. And if you want to contribute to your individual retirement account, right? So like a Roth IRA, which I know a lot of expats like to do because it's a great tax benefit from the US. If you exclude all your income with Form 2555, you cannot contribute to your IRA necessarily. And again, you can't, once you use this form, you can't flip-flop. So if you use the form, you should continue to use the form. If you use the form and then you decide not to use the form for one reason or other, you cannot use the form again for 5 years. So there are strict rules to revoke it. Now, the other benefit which we do prefer, or at least I prefer, if you live in a higher income tax country, basically any country in the EU at this point, is the foreign tax credit. So whatever you pay in your local country for taxes, you can claim on your US tax return as a credit. So directly against any US taxes owed. This ensures there's no double taxation. It is a pretty difficult form to use because it's purely math. If you look at the form, it's all math, right? Figuring out how many foreign taxes you paid, how much income is allocated to each type of bucket of tax credits. When I say that, if you look at the top of Form 1116, you'll see there's a couple check boxes. I think there's 8. And it says general, passive, resource by treaty, et cetera, et cetera. there are different buckets of income. And so if you have foreign taxes on your salary, you can use those foreign taxes against other salaried income or other general income. If you have foreign taxes on investment income, you can use that against other passive income types like rental or other investment, et cetera, et cetera. You cannot use taxes paid on your salary to offset taxes paid or offset taxes that would be due on rental or investment income, right? So you can't go and mix match through the buckets. Probably pretty confusing as I listen to myself explain it. So that is a con of this form, is you will have to read through a lot of instructions to do it. There's also, if you use this form, there's a second version you have to do of every single one of these forms called alternative minimum tax, which is like a background tax calculation. I understand I am boring you now. Basically, if you use MyExpatTaxes, we do all the math for you. We make sure everything's in the right bucket, all the right forms are included. If you do it yourself, I hope you're very savvy at Excel, because it's definitely a giant Excel exercise. But the pros are that you can claim the additional child tax credit. You have enough taxable compensation to help make you eligible to contribute to IRAs, assuming that you're eligible in other ways to contribute. And you get basically a carryover of any unused tax credits for the next 10 years. So if you pay a lot of taxes in 1 year and then maybe the next year you don't pay that many taxes, you can use any unused credits from the previous year to offset taxes in the next year. And this carryover lasts for 10 years. So it's pretty good in that sense. And again, the last tax benefit is a tax treaty. So the US has a tax treaty with over 60 countries. And in these tax treaties, it's pretty much spelled out how each type of income is taxed. If the US has taxation rights, if that country has taxation rights, et cetera, et cetera. Seems pretty clear. However, every single tax treaty has something called a savings clause. A savings clause, if you literally read it, it says, as a US citizen, pretend this treaty didn't exist. So as a US citizen, you cannot use 99% of any tax treaty, is what it comes down to. That 1% is the important part. There are some articles in every tax treaty that are exempt from the savings clause, most of the time having to do with Social Security benefits. And that will allow you to use a tax treaty benefit to say, hey, my US Social Security benefits are not taxable by the US. Instead, they're taxable in my country of residence, etc. So this would be using Form 8833 to disclose. If you use a tax treaty benefit and you don't disclose it, there can be a $1,000 penalty for not disclosing it. I've never seen this penalty enforced, but it says it at the top of the form, so just something to be aware of. I do think it's a difficult one to use because, like I said, even if you understand what the tax treaty is saying, you have to also understand it in connection to the savings clause. So that is, the 3 tax benefits that ensure that you as an expat are not double taxed, but you obviously need to know how to use them. So if you're confused and you're thinking, how am I supposed to know which tax benefit to use? Can I use all 3 of them? Can I only use one of them? You can use all 3 of them at the same time. You can only opt to use one or the other. And if you use MyExpatTaxes, all you have to do is enter your income in the local currency. We convert it for you to USD. We figure out what's the best situation you can have using the different tax benefits. And we tell you at the end what tax benefit we used, right? So we'll tell you your tax return is best optimized using the foreign earned income exclusion or the foreign tax credit. If you apply for a tax treaty benefit, despite the savings clause, we'll automatically put that tax treaty benefit in there for you. So that is the benefit of using a tax software that is made specifically for expats. You don't have to think about this yourself. With that being said, say that you're streamlining, you're all caught up, now you want to stay caught up. What's your filing deadlines? Well, everyone knows April 15th as the original filing deadline. Even non-US citizens know of April 15th because it's in every single sitcom that you see. But basically, just know it is usually April 15th. If April 15th falls obviously on a weekend or holiday, it's the next available day. So this year it's April 18th. And if you are actually living abroad, you have a 2-month automatic extension till June 15th. So you don't actually have to file until June 15th. Just be cautious. If you think you owe taxes, if you have a lot of US source income, if you pay US taxes in the end, if you're just nervous, file by April 15th to see, because you have to pay no matter where you live, if you're an expat or not, by the April deadline to avoid interest and penalties. You don't have to file until June 15th if you're an expat, but you still have to pay by April. So it's kind of like this chicken and egg situation. Regardless, the June is an automatic extension. I say it's automatic, but again, be aware if you use a US-based tax software, they might not include the right disclosures for you. So while it is automatic, you do have to make sure you include a statement to say that you are a taxpayer abroad and you qualify for this extension, because how else would the IRS know? And then if you do want to extend further, you have to file another extension form. So this is not automatic. You do have to file it either electronically, which we allow you to do for free via MyExpatTaxes, or you can paper mail it. I wouldn't recommend that because you'll probably not reach the IRS before your tax return actually reaches the IRS. Or you can always pay $1 via an extension payment on irs.gov/payments. You do have to file that extension request by your deadline. So if you're an expat, you have to file Form 4868 by June 15th to get the extension to October. So that's the next filing deadline. There's a couple more things to be aware of. E-filing normally shuts down. So that is when you cannot e-file any returns. So there's a huge block in the system. The IRS does not accept anything electronically. That's usually the third week of November until the following February of the next year. So that's when e-filing will shut down. And if you want to extend, this is normally very common for those with foreign corporations that need to wait for their foreign books to be completed first. By the October deadline, assuming you have the October deadline, you have to send a formal letter to the IRS requesting extension until December 15th. So keep that in mind. And obviously at that point, you're paper mailing your return. So if you owe taxes as well and you have back taxes, file as soon as possible to ensure that the interest and penalties are as low as possible. That was a lot of information. I know, good thing that this is all recorded and you can look back on it. Basically, that was the not so great news. This is the stuff you have to look forward to. If you file via Streamline, like I said, and you haven't claimed your stimulus payments, these were basically payments made from the US during the pandemic, so calendar year 2020 and 2021, and they were available to all US taxpayers. You do have to have a valid social security number, right, which usually means you have to be a US citizen or a US green card, and you cannot be a dependent on a US tax return. You can be a dependent on a local tax return, that doesn't matter, but you cannot be a dependent on a US tax return. This is more a problem for maybe students that may still be, that are studying abroad, that might still be on their parents' US tax returns as dependents. And there are income thresholds. So like if you're making over 75,000 US dollars, you might not be eligible for these refunds. And again, there's always ways to lower your income for this. We'll talk about that shortly. But basically, if you're eligible, you can expect on your 2022 tax return, $1,200 per taxpayer, $500 per qualifying dependent. And in addition to that, $600 per taxpayer and $600 per qualifying dependent. So say you have no dependents, it's just you filing, you can expect $1,800 as a refund on your 2020 tax return. For your 2021 tax return, it's $1,400 per taxpayer, $1,400 for dependent. So again, if you're a single filer, you can expect $1,400 as a refund on your 2021 tax return. So that's why I say you might be nervous about filing, but hey, you'll probably get a refund actually, so it's well worth it. If you haven't filed or you didn't claim these refunds for one reason or another, you didn't know you could, you can always amend or just file the refunds or file the returns and, you know, make sure that you get these refunds because you're eligible for them and you shouldn't just leave them on the table. So this is the other refund you might be able to look forward to. If you have US children with US Social Security numbers and they're under the age limit, keep in mind the age limit did change a little bit. It's normally under 17. So they're under 17 by December 31st of that calendar year. In 2021, it was under 18, but now it's back to under 17. You can get anywhere between $1,400 or more per qualifying dependent. You obviously can see the amounts on the screen. You do need to have more than $2,500 of earned income. You can't use the foreign earned income exclusion like I said, and they need to have a US Social Security number. So just make sure that if you don't have Social Security numbers for your children yet, go ahead and make sure you file an extension for your 2022 tax return so that you have enough time to get them a Social Security number because it can take a little bit of time. One thing to note is that the Social Security number has to be valid by the due date of the return. So say you're filing Streamlining and then you're getting your Social Security number for your child this year. You might be able to claim them on your 2022 tax return, but you definitely won't be able to claim them on any tax return prior to 2022 because the Social Security number must be valid before the due date of that return. Another one, which has been in the news pretty recently, I guess it's kind of died down at this point, but is the Biden student loan forgiveness. It's an interesting one because we're still waiting to see if it actually pans out. But if you have student loans in the US, student loan debt, you can get up to, $10,000 of student loan forgiveness, assuming that your income is under $125,000, or, if you're married filing jointly, obviously these amounts are doubled. Just keep in mind that it depends on your 2020 or 2021 tax return. So obviously you have to file those returns so that, pretty much the department that will determine if you have student loan forgiveness or not can see your tax return and verify that your income was under the threshold. And once you go ahead and submit the application, so applications are open. I think they get paused from time to time, but if applications are open, you can apply. And basically you'll be told if you qualify or you don't qualify. The only problem is because of all the lawsuits in the US, the actual forgiveness has been on hold. So fingers crossed that everyone that has already gotten a confirmation that their student loan will be forgiven up to $10,000 will actually get that benefit. But that's another story. You know how the US operates. There's always a lawsuit going on. But this is another refund to look forward to. Just know it's nothing you will see on your tax return per se. It's something related to your tax return. So you have to make sure you have a tax return filed. And then depending on what your tax return says, you might be eligible for this forgiveness. So this is something to just be aware of. I have been telling you 2555 is not great in terms of trying to get the refundable child tax credits, but it can be great in other ways. So say you don't have US children, you don't care about the additional child tax credit. You might want to use 2555 over 1116 to lower your adjusted gross income. So this helps you if you're a high earner. Obviously, the amounts I have here is for 2021 because the student loan forgiveness is dependent on your 2020 or 2021 tax return, not your 2022. But basically, if say you're earning 200K, you obviously don't qualify for student loan forgiveness or stimulus payments. But if you use 2555 to exclude, X amount of money, you can actually lower your adjusted gross income to be under the threshold amounts. So that is one event where 2555 can be a lot more beneficial than 1116. Again, it's a lot of information, but it's something to realize that you can actually optimize your US tax return. It's not just something you file, it's something that there's actually some strategy involved in optimization to get you towards your financial goals. So MyExpatTaxes will help you optimize your return based on what your financial goals are. With that being said, that was a lot of information. If you haven't been filing, I hope you get right on it to go through the streamlined filing compliance procedure. If you have been filing regularly, I hope this was a good kind of update for you on what you need to watch out for, when you need to file. If you're looking for a tax partner, we are here for you. MyExpatTaxes is available to every type of taxpayer. Whether you want a do-it-yourself version where you go in, you don't talk to anyone, you can always talk to our support team, we're always there. But say you don't necessarily want to talk to anyone, you want to do it yourself, we have that version. We make it as affordable as possible. Say you want a middle version where you want some support, but you don't necessarily need a full-blown, tax professional to hold your hand through things. We also have that level. And say you want a video call with a tax professional, you want to talk to someone through this, you want to get some good advice, you want to understand what you're filing, you really want to, be on top of things, we also have a tier for that. So no matter your complexity, no matter how simple your return is, check out MyExpatTaxes. I am sure you'll find something in there to help you be compliant with your US taxes. And we will jump into a live Q&A afterwards, just in the event that we cannot get to your questions. Make sure you join our Facebook group where it's a very active community. There's lots of expats in there that are facing the same problems as you. And if you can ask all your questions, and if for some reason your question doesn't get answered by the community, or we see the question pop out, those questions actually get directed to me and my tax team. We will answer them for you, and then our team members will then post our answers to your question. So it's actually a very good way to indirectly get in contact with us and our tax professionals. So I hope you enjoyed this webinar. I hope that you're leaving feeling confident that you will get on top of your taxes and you're maybe even a little excited to start. Thank you so much.